What's going on? Welcome back to the channel. Today we're going to talk to you about HIMS health. I want to go over some of the data points, break it down on what's been really moving it, and go over everything else that you need to know. But first, make sure to hit that thumbs up, and with that, let's get right to it. So it is down 2.14% today, 34.13 the low, 25.82 the high, and 6.7 million shares being traded. So institutions aren't really doing that much with it today, and so you can even see on the secondary market, there's only one transaction. It was done pre-market, and it was a sell for 150,000. Even looking at the dark pool, that one seems to be a little bit more popular, and you see some bigger transactions here. But dark pool is often enough used by shorts as well as hedge funds. And right now, popping over here, we can kind of see shorts are returning about 72,000 shares. 35.74% of the free float is being shorted, works out to be 73.6 million shares overall being shorted. So given this data right here, it is fair to assume that most of these transactions are hedge fund related, and regrettably, based on the price action, most hedge funds are kind of selling. So you're not really seeing that much buy the dip type of mentality right now. A lot of that has to do with just broader market fear. So today we did have a couple data points that came out signaling more consumer cracking. So initial jobs claims came in at 232, consensus was 223, forecast of 254. So even though it was lower than the forecast, still markets seeing that as just too high. ADP employment, the weekly, did come in at negative 2,500. Not as bad as last week, but still it does signal kind of some cracking. And I feel like a lot of influencers and people on like Twitter, for instance, are just kind of blowing up. And what they're really saying is, how can him and hers go down so much? For instance, over the last like 1 month, down 33%, when they just announced a 250 million buyback program yesterday or on the 17th. And so in general, I do agree that him and hers has been hit quite hard, but it is all just sentiment. So even though they did do fairly well on their most recent earnings, there was a lot of, like for instance, their future guidance was rather soft, signaling that maybe margins won't be that great, a lot of competition, regulatory tailwinds, a lot of kind of issues like that. So a lot of people are not really understanding kind of that side of it, even though again they did beat on their top and bottom line. And plus, whenever you have any insider going on social media kind of retweeting saying, hey, you know what, we might have a squeeze, didn't say that exactly, just used the eye emoji, and then pretty much a couple days later sells a lot of stock, that is a massive red flag and a slap to investors like who got in because of potentially that tweet. So it's just a very bad kind of chain of events. And I think him and hers is a very good, innovative company. Many years down the line, people will be looking back at this price point and wishing that they bought more. But for those of you that are trying to catch the bottom, it kind of signals a little bit more of a tricky scenario. So yes, right now it is very heavily shorted. So 35.7 is crazy stuff. Almost the high is around 39.71. So shorts have really chosen him and hers in 2025 to be the target. And I don't really think that there's anything negative about him and hers to justify that. Rather than it's just a innovative company, and that's what Wall Street generally hates. There was a couple of new analyst ratings on a side note that did come out and was posted today. So you had a $32 sell that was done by Bank of America. Analyst is Alan, who has a 69% success rating, so pretty good for that. 37 hold by Truist, and this analyst has a 33% success rating. Then a $30 sell, Mizuho, and it just shows unknown analysts. So analysts aren't really that optimistic. Again, I think a lot of that maybe negativity is coming from macro data rather than specific to him and hers, because one thing that is starting to come out now is a lot of hedge funds are assuming that in 2026 we actually might be seeing some rate hikes. And that is exactly what the market does not want to hear. So potentially maybe some of these ratings kind of include that, but as a consensus, 46.25 is that price target, representing a 33.06% upside. Him and hers, I've actually made quite a lot of money because I personally wouldn't mind buying it at these prices. And what I've been doing is selling puts. So for those of you that like any stock in the market, consider selling puts, because it either gives you, you get the premium, or you buy it at the stock at the price you want. So you can get a little bit more of a value. So I think right now, even if you time, let's say anywhere from $25 to $29 strike prices, you'd be pretty good in my opinion. So let me know your thoughts on that in the comments below. Looking at the options, we are seeing 2.3 million in calls, 4.3 in puts, and then 48% of all the options being done are bullish in nature. From a bull standpoint, you see a consensus for it to be roughly around that 35 to kind of 36.50 for the most part, so a little bit more of a recovery is anticipated. And from a bear standpoint, you see a consensus for it to be sub $34. So given where we are at, there's definitely a lot more upside anticipated. A couple of key points with it at 34.79 right now. It is trading between this S1 and this S2. So 33.41 followed by 30.45 is going to be support levels, and then 35.25. Ideally, that is going to be what it can get over either today, if not over the next couple of trading days, to signal a little bit of a recovery. And then 38.22 would be the following support level. So just kind of take a mental note of a lot of that for support and resistance points if you're wanting to dollar cost average or whatever else. Aside from all of that fun stuff on the actual chart, things aren't looking too great. Anyone saying that this is kind of the bottom, they're just speculating. This is very much a falling knife type of scenario. So again, do your own due diligence, and it all depends on kind of your time horizon. But right now, things aren't looking too great. The only positive thing is stochastic RSI is very oversold. So a good piece of news. More so on a macro standpoint, could really push things higher. So let me know your thoughts on, for instance, him and hers. Are you buying? Are you selling? On a side note, if you do want to take a look at a lot of these analyst reports, I recommend signing up for Moomoo. It is completely free to do, but they have a pretty good promo where if you throw $100 at it, they give you $50 back. So take advantage of that. But I really like to use them for their reports, because normally to have analyst reports, you have to pay. Through them, they actually remove that paywall. So definitely you can look at all these most recent ones. And again, this kind of gives you a little bit more of a further breakdown. One thing as well I do really like about Moomoo is it actually makes options very simple. So for instance, if you do assume him and hers is going to recover to just throwing out $40, for instance, which works out to be a 15.44% increase in common stock, you can make a solid 200, actually that's assuming by this Friday. So let's say throwing out February as a date, you can make a solid 26.8% on a long call versus 15 for common stock. So definitely very advantageous to kind of use Moomoo. So use them, link in the description below and also the comments. And then one final thing I do want to share with you, I did have a new promo with Stacked. So I just launched this. Initially I only had 50 members, but I just extended it to 100, more of a promo, and it is a $1 price for 1 month. And so this is gives you access to daily day trades, numerous swing trades. So if you ever have been curious about some of the bangers that I put out, definitely check that out. Link in the description below and also the comments. But with all that said, appreciate all of you watching.